Good day, everybody. Tim Haefke from Top Notch Trading here on Wednesday, December 17th, Fed Day, with today's MrTopStep update report. Anyway, Monday I came in and I showed you some moving averages, and I'm going to continue on that theme right now, and I'm going to bring you to my first chart of the NASDAQ future. This week, the first 2 days, we did see a breach of the 50-day moving average, and it's key right now because on the overnight session, we made a high of 41.1675, and this 50-day moving average is at 41.20 and change. So 41.20 to 41.20 quarter, and a trade below there has its eyes set on the 100-day moving average that lies in wait at 40.61 even to 40.61 quarter, right there. And the key level right now on the charts that I look at is 79.5. We held that level yesterday. We held it overnight again. So I'm looking at 79.5 stops. And if that 40.79.5 gets breached today, look for it to run to the 100-day moving average for a solid test. If the results are good and we get a move above 41.20, like I said, I expect some buying to come into the market. Now I'm going to compare this E-mini NASDAQ chart with the S&P E-mini. Let's go to the next chart. Now look at, earlier on, we had a first test of the E-mini 50-day moving average in the S&P, and our first result did see a nice little bounce. But then on Monday, I talked about coming down to test the 100-day moving average, which right now is at 1974 even. Okay? We did find that test on Monday. We had a nice bounce of about 15 handles or so, and the move down of 16 handles, which was mentioned. And the fact that we opened up at 72 to 74, we see we're circling the wagons at this 100-day moving average moving into this Fed day. Below this comes the 200-day moving average, which is key right now, and that's at 1928.90. If the release of this announcement today sends them spiraling lower, I do have that 200-day moving average looking for as an objective at 1928.90 with the line in the sand at 1926. A move above this 100-day moving average, the 50-day moving average could see the buyers come back in. Right now we have a regular session high, I believe, at 1982.20, 1982 half mini. So we need to exceed this 1991 and change in order to have this succeed. One more point of interest. My friend Rich from the floor pointed out last year at this time, when the Fed announced their results, there was a first 8-point spike in the S&P, followed by a 12-handle break, and it followed with a 38-handle rally into the close. Is Santa Claus coming to town? I bet you Fed will be the point of interest behind this. So with that, we'll leave it go and have a good day.